Each morning we review the market open in Asia and the direction of travel for the day. Let's kick off with our regular Monday morning commentator, Mr. Omar Najia, Global Head of Derivatives at BB Energy. Omar, it's a bit like Groundhog Day. It's Monday morning. It must mean oil prices are starting their ascent once again, having tried to get to 70 and backed away, and now we're up again this morning. Out on Brent, 66, high 66. What are your thoughts of the market this Monday morning?
Yeah, so basically to kind of, give you a kind of a coherent picture. So on WTI, there is a low that we set recently at 60.62. So as long as the market stays above 60.62, then I'm looking for a high, not a high. I'm looking for the market to move to a minimum of about $72 with a good chance, 60-40 chance of getting maybe to 78. If we move below 60.62, then basically I think that gets delayed a little bit. We test, 57, 56, something like that, and then we go to the upside. So the trend is up. The only question is, do we get to higher numbers immediately from here without going below 60.62, or do we have to kind of test lower before we move up? The view on US equities is wildly bullish, so they're at 4,100 now, plus or minus on the S&P. I think that gets to 4,900 on this move up. And we wait and see. All the cryptos, I think, very interesting. Everybody's like, it's the usual stuff. It's a bubble, it's evil, it's ransom, it's this, it's that, it's that. And when that goes away, which it will, then again, I think you get to see risk appetite come back in and drives those prices higher as well. Dollar lower.
Dollar lower. That's certainly been the trend, hasn't it? Made dollar lower. Kevin Wright, lead analyst for Asia Pacific for Kepler. Kevin, one of the principal pillars of this commodities rally, this blistering commodities rally 2021, has of course been Chinese demand. Are we seeing some cracks in that bionic demand that saved the markets last year?
Excuse me. Good morning. Yes, it's very much the case that China has driven the global demand picture over the last year. They were able to recover from the pandemic much more quickly than any other economy globally. It's interesting you mentioned cracks starting to appear, because obviously, the iron ore story remains strong, the copper story remains strong, but actually in the last couple of months we've seen quite a significant drop off in crude imports. Now I know some of that is related to maintenance in China. The big refiners there, the Sinopec and the PetroChinas and CNOOC have all got maintenance activity at the moment, but we've seen close to 1.5 million barrels a day of throughput falling, basically, or decrease. So yeah, maybe there's a little bit of a sign that the recovery isn't quite as robust. I would say though that as I mentioned a moment ago, the iron ore and copper stories remain relatively strong, relatively convincing.
Let's bring in Vitaly Yermakov, Senior Research Fellow, the Oxford Institute for Energy Studies, sitting in Moscow, I believe, in Russia. Vitaly, the story of Iran's nuclear talks with Russia, with the US and the permanent members of the Security Council in Vienna over the last month has given the oil markets some sort of fragility and movement over the last few trading sessions. The optimism that there's a deal, the price tends to fall, the outlook becomes grim like it is this morning on some comments that there is no deal and so prices rise. What's the perspective from Russia and the East as regards this nuclear rapprochement with Iran?
This has been going on for so many years now, and as you say, it gives markets a chance to introduce a little bit volatility into trades. Really, we're in a situation that those negotiations they're hanging on a fence, so to say, and which side they would go, it's anybody's guess. Strategically, longer term, it is in Russia's interests to have Iran return into the global community. In the near term, obviously, yes, it can affect all prices, but strategically, I think Russia really supports the resolution there. On a separate note, you talked about oil with Omar and about other commodities with Kevin. I just wanted to throw a quick note on the gas side, because it seems to me that this is where the developments have been very interesting over the past months. Europe in particular has experienced this swing of the pendulum from a relative abundance of gas to scarcity, and on the back of relatively cold spring, the gas inventories in Europe has gone down and remained at extremely low levels, and gas prices in Europe have gone up very, very significantly. And now everyone is desperately trying to source LNG, but LNG has gone to Asia. We have heard this loud sucking sound coming from Asia, and all LNG, flexible LNG, obviously is going into this direction. So this is a very interesting situation, which obviously affects the debates over Nord Stream. And
the Nord Stream story over the last week has been a little bit confusing. There's been statements out of the US that would seem to indicate that they're kind of backing away from their opposition, and then they announce further sanctions or penalties for companies involved. How do you read that situation at the moment vis-a-vis the American position on the completion of Nord Stream 2, which is very much in the latter stages?
Well, yeah, first of all, a piece of clarity into this murky business of sanctions. My understanding is that the US decided not to apply the sanctions against the operator company, and personal sanctions against Mattis Warning, the head of Nord Stream operating company. At the same time, they did introduce the sanctions against the vessels, Russian vessels that participate in the construction. But these vessels are really not vulnerable to any sanctions, because they are registered with Russian companies that don't do any business whatsoever in the West. So in practical purposes, it doesn't really change anything. More strategically, it seems that the US has realized they cannot stop the project, and in practical terms, trying to stop it would really hurt Europe and Germany in particular, because they would have to pay much higher gas prices. And at the same time, US LNG, as I said, instead of going to Europe, has gone to Asia, because this is where the price differential is leading them. So it's really, I think it's quite impossible now to stop the project, but the next line of defense will be about what levels of utilization can be allowed and what levels of transit via Ukraine should be secured. Still, sort of the pressure on Russia would come to continue to transit some gas via Ukraine.
Omar, just coming back to your earlier point, touching on cryptocurrencies and Bitcoin, which you've referenced in the past as a sort of an indicator of risk-on appetite, as it was, marching above $60,000. We've now obviously had a major correction, at least at the moment, which is not unlike the trend that Bitcoin has followed over the last 5 years. Goes up a massive, comes down a bit, goes up another massive. But in terms of the immediate, as a reference for risk-on appetite in this recovering economy of 2021, how do you look at that position now vis-a-vis risk on, risk off? How do you interpret it? Sorry, you're on mute, Omar.
Sorry, thanks. When Bitcoin sold off, you saw an immediate reaction, sold off not during the weekend, but during the week. You saw an immediate reaction on both the S&P and on oil. Both of them came off extremely hard. And I think basically that is something that it's an indication that basically people see that link in terms of sentiment, in terms of risk appetite between all kind of major markets. It's also, people who buy Bitcoin, some buy and hold it, some buy to speculate. A lot of people are leveraged, right? So they borrow in order to do it, or they trade with $1,000, but they can buy $10,000 worth of stuff. So they're highly leveraged. So I think all that kind of built into the market. And when you saw people coming out of crypto, you saw the rest come off. And interestingly enough, it wasn't just Bitcoin, but all the altcoins, all the other coins basically, that came off a lot more than Bitcoin. So going forwards, I think that the market basically now sees that kind of excess having come out of Bitcoin. I think basically, if you look at oil specifically, everything you've basically thrown everything in the market. You've thrown Bitcoin coming off 30-40%. You've thrown people saying shale is back. You've thrown people saying Iran is done, definitely 100%, here we go. You've thrown India, you've thrown COVID, you've thrown variants, you've thrown nothing's going to change and demand is, going to do this or that or the other way. And still, the market is trading where it is. So while the market is in this kind of and OPEC plus, don't forget, the increased production and cracks and I don't know what, and commodities. Well, some of them are good, some of them not so good, but we've got to really be careful. And through all of that, we have WTI trading at 63, 64. So what I'm trying to say is markets are not mechanical. It's not like a watch. So, you wind it and then it goes click, click, click. It's more of a, living, breathing thing, basically. So it's like, you have a dog and you've basically put it on a leash and then another one and then another one and then another one. So eventually, I'm telling you, this thing's going to break free.
And you have a few of them at the moment, don't you? You found yourself with 2 dogs during COVID. But yeah. Kevin, speaking of the variants and all of the things thrown at the oil markets, last week did appear to be a glass half empty kind of week, in the sense that it was the first week in many in which the oil price ended the week lower than it started. And we're seeing this morning news out of Japan that is somewhat alarming, because it's Japan and you would expect them to be in a much more efficient place, that the COVID wave that they are now facing, hospitals in Japan's second largest city of Osaka are essentially buckling under a huge wave of new coronavirus infections. I mean, except for everything looks much more neat and organized, they're facing a kind of an India wave at the moment.
Yeah, I think it comes down to the approach to the whole situation, right? So you've got certain countries that basically close themselves down and are pursuing a sort of zero case policy. China certainly was doing that. Taiwan was doing that. And Japan also was closed down to a very significant extent. At the same time, whilst following that policy, they neglected to follow a policy of vaccination. And the Japanese rollout of vaccines has been very, very slow, very, very low. Now, I find
the whole of Asia is very low at 5% with first dose, whereas the US 35%, the UK higher.
Well, again, it varies according to the country and the region, because the Singapore rollout is something like a third, something like 33% right now.
Yeah, but that's obviously small beer, right?
Yeah, there's only 6 million people here.
Yeah.
Whereas we're talking
and
about
it's the most organized place on the planet. So you would expect that they do it in an afternoon.
Yeah, the chance of it a fine thing. They've actually slowed the rollout here. It was very rapid. We were 3 weeks between first and second dose initially. It's now 6 to 8 weeks as they try and roll out the first dose to a larger portion of the population more quickly. But I think, looking at the case of Japan, it really surprises me that they took a slow vaccination route when they have their eye on the Olympics for later this year, and the influx potentially of first and foremost athletes, but also spectators from around the world. So it seems to me there's an incompatibility between pursuing that zero caseload strategy and trying to open up. And I think that's going to be hallmark of the development where we got that we see over the next 6 to 12 months. Countries that have followed a zero case policy are going to really struggle to reintegrate themselves with the global economy. It's going to be the case with Singapore because of the way that Singapore interacts. It's a hub for trading, it's a hub for transport, and it's certainly going to be the case for other parts of the region that are dependent on tourism, that are dependent on travel, and that haven't rolled out vaccines. Thailand, Vietnam, etc. So,
how on terms of the situation in India, Kevin, have we seen yet the sort of full picture on the demand destruction from this COVID wave in India, which is clearly still raging, still a massive challenge? How is it translated into demand destruction?
it's again a very interesting sort of study. It's a tragic study, to be quite honest, but it's interesting to see how the situation in terms of demand developed over the course of last year. We saw huge demand destruction across the third quarter. There were lockdowns, there was reduced industrial activity, therefore the diesel and gasoline consumption was way lower. And actually, as of October of last year, gasoline consumption was back at pre-COVID levels. So it looked like India had come through. Now, obviously, we all know the situation at the moment. We all know the actions and the strategies and policies that have brought about the current situation in terms of the second or third wave across the country. I mean, demand destruction, without a doubt. We don't have full numbers yet because there is always a little bit of a lag, and we're still right in the eye of the storm. But if we see anything like we did see last year, yeah, you're going to see 15-20% kind of numbers down versus where you'd expect them to be.
Vitaly, we saw overnight a story that is probably leading in most major international newspapers this morning, and that was Belarus diverting a Ryanair flight between two European cities that they took to arrest a journalist, a blogger. It does seem that the sort of growing tensions between Europe and the Russia, Belarus, whatever part of that divide you want to paint. But ultimately, this is a fairly significant action, another aggravation into that crevice between Europe, East Europe, Russia, and European Union. Your thoughts on that as an event? How is it being presented in Russia? Is it a big deal? Is it not a big deal?
Well, first of all, let's be clear. This is Belarus, not Russia, that diverted the plane, landed it, and.
But apparently, with Russian agents on the plane and so forth. But
Russian agents on the plane. Well, all right. No, there's always the temptation.
But what's your point? Is your point trying to say that Belarus has nothing to do with Russia?
Let's. Well, it's a separate state. It has a lot to do with Russia. It has a lot to do with Europe. No, let's be clear.
So would you just on that point, so we're clear, do you think the Belarus president would make such a decision without a sense of not approval, but certainly cover from Moscow?
Absolutely. I think Lukashenko, he's gone wild, and I don't think he consulted with the Russian authorities about this particular decision, because for him that would be, first of all, a relatively minor affair. I guess I stress, for him it has become a huge affair, and I think it is going to backfire at him. Well, sort of history teaches us that we are very poor learners. This event reminds me an event that happened in the early 19th century when Napoleon decided to arrest and then to execute Duchy of Enghien, one of the possible claimers for the French throne. And Talleyrand at the time said, "It is worse than a crime, it is a mistake." This might be exactly the phrase that describes the situation. This is probably a mistake. But what Lukashenko thought was, all right, if sort of this opposition leader who started a website that was heavily criticizing president, is sort of within his reach. Well, let's grab him, because it looks like Lukashenko really sort of found himself in a situation when he thought that there were threats on his life, instigated by the opposition with the support of intelligence services, Western intelligence services. Again, that's his perception of how things are developing. And so he decided, okay, well, I'm not going to stop at anything. If you want to kill me, well, I will treat you as enemies. And so he went into this action, and this opposition journalist, blogger, he got arrested. And now, just because this happened, I think Lukashenko essentially burned the bridges, and he will have to move closer to Russia, just by the logical things in terms of its opposition to Europe. If you remember, for many years, Belarus's position was really about trying to maneuver between Europe and Russia. And Lukashenko has been extremely skillful in using this leverage against Russia, by the way, saying, okay, well, if you don't give me subsidies, energy subsidies in particular, I'm going to introduce better ties with Europe. And he was at the same time talking to Europe, saying, well, please give me some help and assistance and treat me nicely, and then I will not deal with Russia. So that was his fundamental position. And now it looks, it would be impossible to play this game for him.
Well, it's certainly a kind of it reminds me a little bit of what happened in Istanbul not so long ago. Not as dramatic. Was that Istanbul or Ankara? Istanbul. Yeah, not as dramatic, perhaps, but nonetheless, where you go into a consulate or you go into an airspace and you expect certain international norms, and rogue behavior begins, and you wonder if that extrapolates in multiple ways, what that means. But it's an interesting story that'll have to be followed. Let's go to the survey question and tackle the point that was made earlier to Kevin. One of the pillars of this year's blistering commodities rally, Chinese demand, may be teetering. Agree or disagree that Chinese demand may be teetering on the side of not being as bullish as perhaps we had anticipated for 2021? Agree or disagree on that point? China has made some fairly public declarations about trying to curtail the soaring prices in commodities, but inevitably, how are they going to do that is a big question. Omar, looking for the week ahead, again, where we started, oil prices rising a little this morning. How do you see the week playing out vis-a-vis last week? By Tuesday, we were already above 70 and then fell away for the rest of the week. Could you see a similar trend this week?
To be honest with you, look, the market needs to make, so the market's consolidated for a long time, right? So that means basically everybody's...
it sort of hit 65 for the first time 3 months ago, the end of February, and it's kind of hovered ever since.
Yeah.
On Brent, that is.
Yeah. So basically the market's been moving sideways, let's call it, for a very long time, which means that it has a lot of pent up energy, frustration, whatever you call it. So you're going to get a break, and the next break is going to be significant. So either we move from where we are now, which is, 64, 63, something like that, towards like $72, or basically we break to the downside and we go from 63, 64 down to about 57, and then back to the upside. But I think the problem with that is everybody would like the market basically to come off because they want to buy it. Everybody would like commodities to come off because they want to buy it. So
it's very much a net long market, isn't it? 80% of open interest on the long side.
Yeah, but I mean, for a reason, right? So if you look at it, if China wants to reduce commodity prices and prices keep going up, what's that tell you? So I think basically, at the end of the day, there is a reason why commodities go up. It's to do with the dollar, it's to do with fears of inflation, and it's to do, more importantly, with demand. because commodities you don't buy them and stick them in a fridge or under the table. You buy them to consume them. They're consumable. So people buying lean hogs or live cattle or whatever it is, they don't, put them in their pocket and walk about. They actually use them. Lumber, the same, wheat, all the rest of it. So they're going up for a reason. People are bullish for a reason. Same with the S&P for a reason. Same with oil for a reason. So I think, all of the markets are pointing higher, and that's to do with, the state of the world economy. We're coming out of this COVID thing. US gasoline demand is back to 2019 levels already, and don't forget, a lot of people were saying it's never going to happen. We're never going to go back, and people will never travel again. And Europe is opening up, and people are driving European traffic basically again. I think they released data last week saying they're again at 2019 levels, pre-pandemic levels. Et cetera, et cetera. And people will still point to India and say, well, look at India. And yeah, you can point to anything, but you've got to look at the broader kind of picture. You've got to look at a picture where the East has already recovered, even if Singapore has, 10 cases or Vietnam has whatever it is. It's already a done thing. You've had vaccines, and now people will say, yeah, but there's a variant or there's a mutant. All that's finished. So the question is, where do we go from here? And I think basically we go higher until or unless the Fed actually does something and says, like, we're going to increase interest rates, or we're going to taper, or we're going to stop buying, whatever it is. Then maybe people cool off a little bit. But right now, with everything coming out of lockdown, Europe, the UK, the US, I think the outlook is positive.
Kevin, on that point, inevitably the expectation or the outlook as to how much of that demand recovery is already baked into these sort of record commodity prices. Looking at from a refinery perspective, obviously China and others in refinery maintenance season coming out of it now. Could that be a lift for oil prices going into June, July, that the end of the maintenance season?
Undeniably, yes. We're in post turnaround. As I mentioned a moment ago, we've seen a bit of a dip in March and April on crude imports, in particular into China. But as we come beyond that, yes, that's definitely a fillip for crude markets. I just want to come back to a point that Omar made about us, as effectively having exited and COVID being in the past. I don't think that's valid at all. I think there are a lot of countries around the world that would say that they are in the midst of the worst part of the pandemic, right? So if you look at India, undeniably, if you look at Vietnam had a fantastic record at the start of COVID last year, controlled it, contained it, and had almost no cases. It's now spreading, certainly in the northern provinces, and they are having it far worse than they had it at any point last year. So they would really dispute the argument that they're coming through it and it's a thing of the past. The only thing that's becoming a thing of the past is how much it gets reported in the global media. But it's still very much with us, and I don't think we're through the woods, out of the woods just yet.
It'll be interesting to see how Japan plays, and if the sentiment of the Olympics there still sort of teetering as to whether that will go ahead. It seems they're very determined for it to go ahead. Let's give Vitaly the last word this morning and get the survey result and see where the view is. Disagree, Chinese demand is not teetering ultimately when one disagrees with that statement. Vitaly, the big possible move this week might be the same as last week. Where is the Iranian nuclear talks going? We're expecting an announcement out of Vienna today, which would be, if it's as expected, an extension of the inspection regime that has expired with the IAEA. And indeed, then that points towards perhaps some reconvening of talks later in the week, and then perhaps that final breakthrough. But that could be one of the big things this week. Anything else you're seeing for the week ahead?
Right. Well, there's this old saying that you can't enter the same river twice because the new waters are flowing in it. So we'll see how it is going to go with the Iran deal. I was watching the chat, And indeed, there was a very good response about prices in Europe going up, prices in Asia for LNG going up, and sort of, to me, I basically have the luxury of not having to watch the short-term movements all the time, but I do watch the important markers. And to me, sort of this surge of demand for gas, for LNG in Asia in general, means that I think the demand situation is healthy, and energy demand in general is going to bounce back.
Yeah, I think that is the sentiment game as to where the camera is pointed, as Kevin pointed out, is certainly indicators out of the US that the lowest infection rate since a year ago, and then and that's obviously the world's largest economy, and then some emerging economies, a very opposite picture. And maybe the emerging economy of the UK, whatever it is, might be showing signs there that they are moving ahead with there was some concern over the last few days as to the Indian variant wouldn't be strong enough, or could overwhelm the vaccine. It now appears that point is not going to be a problem, as Omar himself pointed out last week, that the vaccines are tackling all the variants that are coming at them, at least thus far. Let's knock on wood that continues to be the case. There's a lot of geopolitics going on in the Middle East at the moment, so we thought we'd reach out to the former Prime Minister of Lebanon and have a sit-down interview with him to get his views on all that is transpiring in this region. We've got Turkey trying to rapprochement with Egypt. We've got Saudi Arabia and Iran sitting down and having talks apparently in Iraq. We've obviously got the Israeli-Palestinian standoff. So a lot to get, I think, some greater understanding with. And so we've got in touch with Fouad Signora, and he's going to sit down with us for a feature interview and give us at least his views as to where the region is going coming out of COVID. That might be worth a listen to later in the week. But thanks everybody, Vitaly, Omar, and Kevin. Really appreciate your time this morning, and everybody else for joining us. We'll see you in the coming days. All the best. Thank you.
Thanks a lot.